Greetings, Jeffrey Scott here. This is my Market MRI Pro update for August 28, 2025. I title this one, S&P 500 breaks 6,500. Will September bring relief for the bears? Again, it's August 28, 2025, about 9:30 p.m. Futures are down a bit. And my email address is marketmripro@gmail.com, and Google Groups is top down trader, excuse me. After hours, there were some things that happened. ESTC, big winner, up 18.2% on earnings. Ambarella up 17.9, Affirm up 13.5, and Autodesk up 10.3. Marvell to the downside, 9.8, Dell 6.3 to the downside, and Gap 5.9. One that will be gapping up will be IREN. People wondered where all those Blackwell processes are going to. And IREN is one that we've talked about a lot, and one that's in a nice run, going from being a Bitcoin miner to a data center play. And it looks like after hours, oh my God, right through my short call. Um, we'll see where it ends up. I had a broken wing butterfly on it, but it's was deep in the money already, and wow, it's up $3.30 after hours. But we'll see where it ends up. They have a tendency to move more on the low volume after hours than it does um, during the market. So we'll see. But it's up a lot. Wow. All right, this is for educational purposes only. Anything I recommend is taking the spirit of education and not investment advice. The intent of the video is to show you how I use my tools to do top-down analysis. Trading involves risk. You and your alone are solely responsible for any investment decisions you might make. I may own, buy, or sell any stocks I talk about. Trading stocks and options should be considered risky. You should consult with your financial advisor before making trades. And I have tools in multiple platforms, with even more coming, as MetaStock will be released as soon as I sign off on it. I like to talk about my Google group because that's where I like to communicate. So during the day, I might have some thoughts. Sometimes I won't even put the videos on YouTube. Obviously, right now I'm trying to drum up interest in my live meeting. So I'm going to spend a lot more of these on YouTube, but they'll start going away soon, and I'll do them mostly in the Top Down Trader group. Why not join? It's free. There's no obligations. You don't even have to own my tools. But if you want to buy them, you'll get extra discounts. So think about it. Go into Google Groups, go to all groups, go look for Top Down Trader, and go ahead and let me know how to communicate with you. A couple of announcements on meetings. First, what's not here, I forgot to make a slide. I am going to do on Labor Day, 11 to 1 East Coast time. I've got a bunch of new features coming out in Market MRI Pro, mostly on the scans, doing things that I really like to do with support and resistance. So look forward to showing you that. Also be launching a new trading system. The way I deal with Market MRI Pro is, as long as it's something that I bring to the program, once you buy the program, you get it as long as you continue with the annual updates. And since you need the annual updates for data, as long as you have the program active, you'll get anything that I do. We're also will be launching soon a very special friend of mine's add-on, which I think so many people will be excited about, hopefully before the October meetings. So that'll be Monday. There'll be a Zoom link in the remarks section if you'd like to join us from 11 to 1. The other meeting is the live meeting. It's October 26 and 7, Marriott Palm Beach Gardens, 2 days of packed instruction. It's $1,250. The hotel's $155 a night. It's a full service Marriott, but you really don't need it, because I'm going to get you fat. We'll have a hot breakfast and lunch on Sunday and Monday. I'll have snacks and coffee and sodas all day long, both days. And then for those that want to, we'll take you out on Stocks and Docks, my boat, for dinner on Sunday Eve, weather permitting. If not, we'll go to a nice steakhouse. So either way, it's going to be great. For those that are fans of John Person, he's a good friend of mine, hint, hint. He has a meeting October 24th and 25th, about a mile away. So why don't you do one airfare package and come to 2 live meetings? I also will let, keeping similar to what I did in the Orange County meeting, I will give $400 rebate towards purchase of any of my tools. Unlike the Orange County meeting, I will give that rebate for in perpetuity. I only control pricing on my app, my TradeStation tools, my TradingView tools, and I may or may not have some control on Metastock. So it would only be on products whose price I control. If you're interested, contact me at marketmripro@gmail.com. I'll send you out a payment link, and then I'll send you out the codes for the hotel. News and earnings. I guess Thursday was a perfect storm. Jobless claims come in a little low. You want to see that if you're worried that the economy has a problem with people, um, you know, getting jobs. So that was a surprise. And then the GDP was revised just a little bit higher, as you could see here in the predictions. You put those two together, treasuries rose, yields dropped, and markets went higher. It's a nice picture. They started out lower, but when the data came out um, and was reviewed, um, the markets and the futures turned higher. After hours, I announced some of the big earnings. On Friday, we're going to have just a couple of things, and the big thing on Friday is the PCE complex, and then a few other important economic news. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. The Orange County 2025 E-index, I've kept it alive after the big bounce and recovery off of its chandelier. If it doesn't get above the 50 soon, it's just going to die of old age. So we'll see. And again, for more information about Market MRI Pro, for the live meeting, anything you want, just email me at marketmripro@gmail.com. For Market MRI Pro customer support, coding at Market MRI Pro, consider joining my top-down trader Google group. I've had a few questions from people that are new to me going, hey, Jeff, where's your website? Everybody has a website. Well, I'm 68 years old. You think I know how to program my own website? I'm hoping that we'll get some time and Praveen and I will put something together soon. If not, we've talked to some people about creating one. I've always used my YouTube site instead of a website, but I guess as I've been told by my son, it's time to join the modern era. And the funny thing is, I'm a president of a healthcare technology company, but I focus on the healthcare probably more than the tech. All right, on to the charts. So we start with my daily briefing. This is real time. I don't update it real time, but I push the data. I have the data real time. So every time you change a window, it will update. But you can always just click that little thing right here anytime during the day. And usually it's about a 6 or 7 count during the day to update. You're not even going to see much happening after hours. You could see a good day in the market, not a crazy day. Q's up 0.63, Spiders up 0.35, Diamonds 0.17, and the Russell, which has been strong, up 0.12. Bitcoin down a bit, dollar down a bit, and volatility down a bit. So really a perfect storm. Dollar down, rates down for the markets to rally. Rally was muted, and the breadth sucked, and I'll show you that. If you look at 52-week new high, new lows on the NYSE, very few new lows, triple-digit new highs minus new lows. On the NASDAQ, dropping new lows and almost triple digits. So that's clearly improving. So the new high, new low part's better, but look at the number of advances. The S&P 1500, 41%, only 47% on the NASDAQ, and 48% on the NYSE. And the number of sectors or industry groups dropped compared to the gray bar, which is yesterday, and all of them. So maybe a bit of a surprise that we're seeing the markets do well on a bad breath day, a medium breath day, below average breath day. We shall see. More evidence that not everything participated. If you look at the S&P 500 sectors, tech led, energy second, communications third, discretionary fourth, and then financials to the downside, utilities, staples, healthcare, real estate. Those are what we call defensive sectors. So it was a risk on. And when you look at what themes were working, notice that marijuana isn't on the top today. But what is uranium, cloud, Dow Jones Internet, software and tech. Oh boy. Cyber, social media, solar, artificial intelligence, cyber, and then energy, oil production. And then the other one above 1% is clean tech. So that was like we're back in a tech-driven growth market, momentum playing story. All right, let's take a look at some other things. Timing model. I was surprised that the bongos haven't flipped yet on the Qs. And so even though prices moved above the WMA on the daily, it still says sell. I bet we could get there Monday, tomorrow if we trade up. Remember, Monday's a holiday. Here you could see the prior highs were surpassed on the S&P. We should have balloons. Um, but you could see the S&P, and you look down here on the buy sell line. The spiders, the Russell, and the diamonds here are all in a buy market on the daily. On the weekly, we've been in a buy market. I wouldn't expect to change. Again, you could see the closing at all-time highs. How exciting is that? Um, Weeklies are all in a buy, and not that we need to look at monthlies very often, but the monthlies are also in a long-term buy. So how do I put it all together? Long-term, intermediate term, say be long. And for the most part, the short-term indicators are are positive as well. Only one holding back is the Qs, but I think I'm going to ignore it. And I think with the new high in the S&P, if it wasn't for the fact we're going into September, I might believe that we've now invalidated the Hindenburg. Probably have. And so I have not shorted this market. I have not told you to buy or think about buying contra ETFs. I haven't even shown you them since much since we saw the indies. It's hard for me to go short at all-time highs, and these markets look great. If we look at the index, we could see, just open this one up. Here's your spider all-time high, so it's time to move the bar. Closed right off the high. Now, we're still in that icky negative part of seasonality, and September can be miserable. October is one that's actually positive more often than it's negative, but you can get some pretty significant volatility during it. You're above the 17, the 50, and the 200. If you look at the market today, 0.35 up, the high jump is not concerning. So nothing that really bothers me. We're getting a volume crossing over its MA, the OBV. That's good to see. So, I'm hopeful that we go higher. It's hard to ignore this 10-year seasonality line. That's the only big concern I have, and hence what my title. If we look at the Qs, here's your all-time high. You're in a nice uptrend here. You can see the daily bongo has not flipped yet. It should flip soon, maybe as soon as tomorrow. The Qs led today. They were up 0.63, but as you can see, the high jump is not a big issue. It's 0.68, I believe it said. If we look at the diamonds, here's their all-time highs. I think this is now challenging all-time highs. Again, how can we be bearish? All-time high on the S&P today. Diamonds getting close. Qs close. Another strong session. And we got a nice 1750 and 200 behind, which means, to my perspective, we've got some nice support, even if we get a little bit of a pullback. But I'm not losing the perspective here that we still got a few more weeks going into October before this market has seasonality behind its back instead of in its face. Russell, another day, another up, closed off the highs. Looks like all-time highs, but you got to go back far. That's the all-time high line. And again, like everything else, we're in a period over the next month or so where you expect to see increased volatility historically. If we look at volatility, when the VIX is high, it's time to buy. When the VIX is low, look out below. This is the VIX futures. Um, and you could see a doji, but boy, it kind of looks low, doesn't it? So probably won't mean anything for a while, but I'm watching volatility. And then one thing that I think supported the market today um, and going higher was the dollar came back a little bit more. Probably will hold at the 50, and then we'll see if it just continues in this sideways motion here. So market looks great. Not only did the stocks look great, look at some of the commodities, specifically gold and silver. Gold breaking out. Is gold going to threaten all-time highs? So it's got a ways to go. But gold is making another run. Now it's been in a wide trading range, so I'd be careful. But gold had a big move today, up 0.74. Silver looked good today as well. Let's expand it, and you could see that silver looks. No, that's gold. No wonder I was saying it looks like gold. Let's pull silver up. You got to highlight the one you want and then hit that. Silver is threatening recent highs, but as we've looked at before, there was a time, if we go way back to 2011, when silver went into the high 40s. And as you can see, as you know, we are nowhere close to that. But silver, a nice pop today as well, up 1.52%. Close that down. Oil is really going sideways, but it was up today 0.75. So natural gas, it's making a move off of a low number. It's been down for quite some time. Kind of looks like a retracement in a downtrend, but we'll monitor it. And then if you're long the market, you'll like to see that the 10-year was down 1.24% and the 30-year was down 1% today. So those are very supportive of higher highs in the market. If we go into the buckets, I thought it was interesting, the NASDAQ moved up here, but nothing else had more stocks at the top of their Bollinger Bands today than they did yesterday, despite the indexes being higher. And again, that's part of the story about where we have not great breadth. And you can see, so nothing is overbought, and we're clearly not oversold here. Looking at the market breadth, this is the NYSE getting close to new highs. Here's the NASDAQ Composite also getting close to new highs. And if we look at the stocks above the 20 in green, 50 in white, and 200 in red, a little bit higher, but I guess we're getting close to areas where we get nervous. You can see back here, stocks above the 17, or the 20 rather, was 85%. So we got a little ways, but we're getting stretched there. Not as much on the NASDAQ. You could see on the NYSE and the NASDAQ, new high, new lows are both positive. Again, not a great breadth day. You can see the AD lines are a little bit negative on both, despite a new high on the S&P, and the up-down volumes are positive. And if we look at the bigger breadth that I like to look at, this is what I wanted to point out. We got higher highs there, but the number of 13 weekly new high, new lows has come off that level that I get concerned for being overbought. It's at 0.82, 0.82 in the NASDAQ, 0.91 still up on the S&P 1500, and 0.95 of the Russell. So the Russell is probably now the one that we have to be a little bit concerned about its amount of getting overbought. Other thing is, if you look at something like the S&P 500, we're at all-time highs. We were down on AD lines. This is a classic divergence. Okay, if you look at the S&P 1500, all-time highs, and the if you look from here to here, we're going down on the AD line. So there's clear divergences in this market. And you look at the NASDAQ, which is just below all-time highs, their AD lines have not even turned up yet. So when you see those divergences, when you see the indices up when the market breadth is still kind of weak, you still got to worry about the longevity of the run. Am I bearish? Absolutely not. Am I all long, not short? Yes, but I still have a significant cash position. And since, like many of you listening to this video, My number one position is NVIDIA. I will sleep easier tonight after I saw that the market actually treated its earnings miss, or not earnings miss, but the server sales revenue missing expectations, which caused some of the sell-off. They sort of ignored that today. In fact, if we just take a quick look at NVDA, um, you'll see a stock that had a long-legged doji, which means it was up, it was down. It's sitting right on the 17th and looks poised if it wants to go higher. So I like to look first. I start here 3623. So start with NYSE, the NASDAQ, and the Amex. That's the number of stocks that made it through the filter. Each of these is assigned to an industry group and a sector. So when I do my top down, I got 3,600 stocks I'm looking at, not 500 or 1,500. Therefore, the order of the winners and the degree of movement is going to reflect the broad markets, not just the largest 500 or 1,500 stocks. So if we look at what was working today, let's look at percentage move, technology, energy, communications, and discretionary. Okay. If I look at the 2-day move, it's going to flip around a bit. I think I'm going to look at the shorter term momentum, and it's tech, energy, and discretionary. That gives me the industries in those groups. Let's do the same thing. Let's look at the 2-day momentum, and we got computer hardware, software, travel, communications, department stores, software, hardware, 1, 2, 3, 4, 5, 6, 7, rating 8, semis, and retail. Are those not a high growth stock investor's dream? Um, it's certainly what I like to see. So it gives me 557 stocks. Well, let's just go in here and let's trigger $5, 500,000. And the pullback and uptrend, it requires the stock to have pulled back from its highs. And so it helps me avoid things that are very extended because I don't like buying extended things. Now, my impulses are the signs that something's starting to move. So I'll take pullbacks and uptrends, rank them by my impulses, and you'll see some big earnings moves. So Snowflake had a CPR gap volume breakout momentum. Um, and what a run. Look at relative strength in OBV. And is it extended? It's kind of extended. Now, doesn't mean it won't go higher. It closed off the highs. Its seasonality is strong here for another couple days. But when I see something like this, I expect it to pull back a little bit. If it breaks, continues going higher, I'll take a closer look. If it gives me a flag and an opportunity, I like that better. Rambus, old name, beautiful chart. My God. Stair stepping its way to high heaven. Now it's at the high point. High jumps 100. Gap, volume, breakout, momentum. I knew that Snowflake had earnings. Did Rambus have earnings? Nope. So why is Rambus up? Let's take a look at its news. Good money flow. Earnings came out a month ago. All right. So I don't know the reason it's going up. Again, I would look at this and I would say, that this thing is at the high point of its range. God, this is too far, but what the heck? Um, I don't know if I would buy it up here. I'd rather buy it when it pulls back. Um, PSTG is another earnings play, massive move. I laughed when I saw their CEO. What a casual guy, kind of guy you like to know, go out for a drink with. No tie, no suit, like that. So here is one that I was watching and called out that it was a sideways move. And frankly, it really was in a sideways move for some time before it broke out on earnings. And you could just see up here, 43 cents, 10% surprise. Revenue is growing. And again, what you see is that it's not necessarily how fast it grew because, you know, those are already baked into the earnings estimates. It was a surprise. So Pure Storage. Bill, this one I noticed earlier because of the two blue dots. Um, were earnings out? Earnings were out August 27th. So they were out yesterday. Big surprise there. Not gone too far. I liked where it closed near the high. Everything, the markets don't love September, so I'm not surprised at all to see um, a lot of these stocks. I would not be surprised to see them pull back some, but I'm not surprised to see the bad seasonality at September. SVV, high base up here and breaking out. Big uptrend, kind of a interesting cup. This is an interesting pattern, $11.90 stock, Savers Value Cyclical, Rigetti, sideways moving. This is one that I actually bought and then it fell back into the channel. We'll see if this can break out. It's at the top of the channel, which means it's probably going to move down. Marvell, this one was down on earnings. Kingsoft Cloud is one that we like and we've been watching. Nice move up here. Earnings are a week old. And again, it's moving up despite what doesn't look like great earnings, but I guess you're looking at revenue 25% growth. Um, and you can go down. Datadog looked great, break out above the 50 today. Found it on one of my new scans, which looks for stocks crossing the 50. And then you attach it with the dots. You had volume breakup, momentum, good relative strength in OBV. That might be one to take a look at tomorrow. Um, Probably figure something like this in here and look for it to take that line out. But I think Datadog looks interesting. CCJ, probably the best of the uranium stocks. Nice move off the 50. You saw uranium was a number one group. Its earnings are not to November. BBW, Build the Bear Workshop, probably a place I'll have to take Molly, my 4-year-old, to be soon. Not a name that I usually play. APPN, Appian Corporation. A firm was up big after hours. Let's see if the earnings are in here yet. You could see 242% growth rate. That's impressive. 81% surprise. Revenue growing 32%. Now it trades at a massive PE, but you'd still expect this thing to have a nice move up in the markets on Friday. So I love to do that. Sale is one that I've looked at, and it's not doing anything here. Um, be interesting to see if it can break up there. So that's one way I like to start. Another thing I like to do is sometimes I won't look at the sectors. I'm going to leave those, but I will bring up all the industry groups so you could see that I now add, let's turn everything else off. I add independent power, engineering, rental and leasing, and renewable utilities. Let's take a look at these stocks, see if anything looks interesting. There's your Rambus again. Interesting how it could be in there twice. I'll tell you why, because I didn't turn off the ones below. Okay. All right. So TAC, um, this thing's either broken out or getting ready to break out. That may be an interesting thing to look at. Yeah, I think it's broken out. Don't know anything about this. Let's see. It's a utility. Um, Pays a $2.04 dividend. Earnings are not to November. Looking for a top momentum pick. Why this is a great choice? Okay, you're breaking out. I like that. We looked at CCJ, MTZ, um, industrial play. Earnings are out. Earnings are good. Look at that growth. Look at this growth rate in here. The PE of 19.98. Now it's a super expensive stock at 180. Looks very interesting here, coming out of a squeeze. Keysight, and then I got Garmin breaking out here. So I like to look at the top performing industry groups. What are the stocks in them? I like to look at the top sectors, then to the industry groups. And then sometimes I have what I really like everybody else, is show me the best shiny object in the whole market. So the way I find it, and my favorite part of the program until I show you what I added, is I'll go into 2 days of momentum up, price over 5, volume over 500,000 shares. And let's look at these and see if we find anything that looks good. Bill, I already talked about. This one was up on earnings. It looks interesting here. Datadog looks great. I think Datadog looks great. Earnings are already out. So I like Datadog, and I might put a buy stop above the trend. I think that's fair. This is this one. ESTC, it's going to gap up tomorrow because of earnings, so I don't chase. Cloudflare, a little bit of a pullback to the 50, looks like it's going higher. And what we're really keying on are these two dots. And I will do more of a study on them for my live meeting and show you why I like the two dots in a row, but only those dots. PAGP, Plains Group Holdings, and MLP, which means it pays some kind of money down here. Big dividend, 6.9%. It's below the 200 and the 50. I'll pass. PCOR. Yeah. Then there's your Power SPSTG. I think in Bill and Datadog may be two of my favorite stocks that we've seen so far. Now, you can do the same top-down analysis that I did before, pull back an uptrend, not pull, same top-down analysis, but the same chart ranking, and pullbacks and uptrends ranked by number of up impulses. There's Snowflake, again, looks great, looks like it wants to go a whole lot higher, and all that stuff is true. Beautiful on the weekly as well. But wow, kind of a massive cup and handle and a breakout on the weeklies. Let it settle out. It may open up higher, in which case maybe, but I'd probably be expecting it to maybe pull back a little bit. VNet, um, probably got to change this. Is it ready to run this time? It's coming out of a squeeze. Relative strength and OBV turned up. CPR, volume breakout momentum. Again, I have no idea what this even does. Earnings are out. Vion, don't know that stock. Rambus was another one we liked, but I thought I'd be rather buy it down here. But a breakout above that is okay too. Anything else I wanted to look at? I think I've shown you a lot. Marvell, again, earnings are out, and this one's going to drop tomorrow. So, as usual, I look at the markets. My thoughts on the markets are we have reasons to be worried. I showed you some divergences. We have those Hindenburgs still sitting out there, but I don't short all-time highs. And right now, we're there on the S&P. We're not far off on the diamonds. The Qs, even though they got a short-term weekly, a daily bongo that's red, are not far. And even the Russell's been moving. So I'm still cautiously optimistic. However, I can't ignore this. And if you ask me why I still have 40% or more in cash, it's because this is 10-year seasonality in green, 5-year seasonality in the more purple. We are going into a tough month. So I think it's okay to have some dry powder because imagine if this market pulls back significantly. You'll be able to buy a lot of these great things on sale. So have a great night, and we'll see you over the weekend, and have a safe holiday. No drinking and driving.